All right, so we'll be looking at some pairs basically today. Let's start with, okay, we have USD on our screen. We can as well just start with USD JPY. So on the overall, USD JPY seems to have been coming down, which you can see basically by this. It seems to be on its way down on the overall. But you know, we don't trade off the weekly time frame. We look at the 4 hours. So this might just be to give us some form of wider perspective. We go to the daily and we notice that UJ is approaching a significant point here on the previous high, right? We'll go back to the 4 hours. On the 4 hours, what do we see in UJ? Those of us who have watched the video will notice that this point here we can mark up this point as our previous source, right? That was the highest point there. That is our previous source. And if you are conversant with our color code, this will be colored blue. So that's our previous source colored blue. Remember, we trade from source to source. And when we get to another source, we anticipate for a rejection. And if price pierces through it, then we begin to look at the opportunity to sell. So what do I mean? Price dropped from this source and price is approaching to retest the source. We could expect price to drop down. And if price breaks it and gives us an entry for a buy off the 15 minutes, our entry signal, we could as well enter. That being said, we'll still have to mark up our breaker, the last bearish candle before the push up. And that is our breaker there. The last bearish candle before the push up. That last bearish candle, we can color it maybe something like gold, orange. So based on our entry technique, when price broke through this breaker, we were waiting for a retest to sell. And we sold, let me put this in, properties, show grid separators. All right, so each of these is 1 week. So for like almost 2 weeks, right, we were selling UJ. We were selling UJ for 2 weeks. No signal provider, no strategy would have told us to buy and we would honor it. We were basically selling UJ. It gapped on this particular day. This was the last order block. This was the last order block. And once price closed above it here, we were waiting for a retest to begin to buy. So in essence, we also have been buying, we bought UJ throughout last week. We might not have gotten this buy. We're not bothered. We're not trying to get all the pips in the market, but we sure would have gotten this buy upon a retest. We wouldn't have caught this too based on our strategy, because we would have been looking for it to sell down. So we might have lost the trade here, or might have gotten stopped out at break even or even SL. But at the beginning of last week, we bought all through, or rather this week, we were buying all through right up to this point. Now, price has come to retest this breaker and this order block and this source. So we'll be looking for an opportunity to sell if price gives us that. But we wouldn't be just selling blindly. We note that we have an order block here, the last bearish candle, this, the last bearish candle. We use red for order blocks. This is the last bearish candle together with the wick. Remember, the last bearish candle together with the lower wick to the candle to the right. This is our order block. Should price pierce beneath this and close beneath it, we will officially be sellers. For now, we are still buyers. We are only a little bit more careful because price is approaching a source and we expect it to react once it approaches the source. So for the early part of next week, which could be Monday, we expect two things. If price breaks the source, closes above the source, it might give us an indication that this rally to the upside is not over. And we'll simply just follow what price does. Kindly mute yourself when you come in. Prof, are you online? I'll make you a co-host so you could help mute out.
All right, sir.
Thank you, bro. So if price breaks above this source, we are buyers. If price comes and breaks beneath it, then we are looking for opportunity to sell. You might have some strategies I'm telling you to sell off from there, fine. We are not bothered. But based on this strategy, we are still bullish. We're waiting for price to push. And price can break through this and just keep moving. So that's our bias. That's our analysis, rather, for UJ. We'll be looking for UJ to continue to push up. Let me take this out a little so you see what I'm saying. I'll magnify this a little more. So basically, UJ made this swing low and pushed up to form a swing high. The red dot there tells us that price closed higher than the recent high. Now price is coming back to retest the order block. Upon a retest of the order block, we'll be looking for opportunity to buy. We'll be looking for opportunity to buy. So we are still bullish on UJ. However, if it breaks beneath this point, then we are sellers. We are already seeing rejections of the 4 hours. If we go down to 15 minutes, we would notice that UJ gave us a breaker on the 15 minutes. Here, this was the last down before going up, and it came down. Or if you want to use it, the last down before going up, and it has closed beneath it. So could that signify that we are now bearish? We are not sure. The 4 hours will tell us what to do. So we are more concerned about what happens on the 4 hours. Right, so that's what we'll be looking at. A breakdown, and we are sellers, right? So let's look at GU. Let's look at GU. All right, GU. GU just took out all these lows on the weekly. It closed beneath it. So on the 4 hours on GU, let's see what the 4 hours is telling us. Okay, here we are on the 4 hours on GU. Magnify a little. Take out this. GU on the 4 hours, this was the last push up. Can we see? This up candle is the last push up before the lower low that was created. So what we usually would have done, would have marked up this, right? I know some people mark it up like this, and then this would have become a breaker, right? But I prefer to mark it up to the week. If you understand how price candle or how candles form, you will notice that this bullish move also continued up and the seller started coming in here. So for this, if you mark it up this way, you'll be seeing this as a breaker, an opportunity to buy GU. But I'll prefer to mark it up this way to be consistent. And at this point, we're looking for price to break and close above. If price breaks and close above this box, then this order block automatically becomes a breaker. And now we'll be looking at buying, right? So in an earlier meeting with some of my friends, it was marked up like this, and this was a breaker. We're looking for opportunity to buy GU. But let's take it this way. These are breaker, the last bullish candle with the wick to the right, that gave us this low. Price is making a move. So we are waiting for price to close above, then we'll become buyers. But as it is now, we are in a seller's territory. This could as well come down to create a lower low. Watch our part 1, part 2 of the video online on YouTube to get it clearly, right? So we are in seller's territory, even though I expect price to go up, close above, and give me a breaker for us to go long. I might explain that much later. But based on what we're seeing here, we expect price to drop. We expect price to drop. Hold on, please. All right, I believe I went off temporarily. My network was acting up. So we're waiting for, based on this strategy, we have no bias. We have no bias. Some persons caught hundreds and hundreds of pips over the last 1 month simply because coronavirus and whatever has been happening around the world has made so many pairs trade far above the average ADR they usually do, right? So having bias at this point in time might not just help you. Just look at what price action is doing and follow it. For now, seller's territory. If price breaks to the upside, we are buyers. So be watching to see what price does on market open on Sunday. If it gaps to the downside and takes out this, still seller's territory. If it gaps to the upside or even just pushes up and close above this box, I'm a buyer. I'm a buyer. So that's for GU. That's for GU. Let's look at some of the card pairs, and I'll be looking at Euro card. Right, for those of us who love trading gaps, Euro card just closed out this gap here. Right, Euro card came back to close this gap. It opened up on a particular day and created this gap here, and that gap has just been closed out. Right, but in the bid to close out this gap, it gave us some market conditions, right? So this was the last down candle that created the higher high. Therefore, this was our order block. But price came back and pierced through this order block. And once it pierced through this order block automatically became a breaker. And now, pierced through, gave a retrace and dropped. This is the next order block we have. This is the next order block, sorry. We expect price to trade into it for a retest and drop. So automatically, we are sellers of this. We'll be selling Euro card. to complete the markup, we'll have this as our source. We have that as our source. So I'm looking at price to trade up, do a full retest of this. Those of us who have been following us for a while, this is a one candle engulf. I'll be waiting for price to come, do a retest at this zone, and then sell off. So we are sellers of EuroCAD. We'll be looking for opportunity to sell at price when price opens. We are in a bearish order flow presently on EuroCAD. We are in a bearish order flow on EuroCAD. Let me call up USD CAD. Let's call up USD CAD. Yeah, okay. Calling up USD CAD. All right, here we are on USD CAD. Let's go back to the 4 hours on USD CAD. You need to know what you are waiting for to happen. Before it happens, then you now enter the trade. You need to have an idea of what you expect to happen. So, right, this was the last down candle before the high that was created here. Maybe I should just take out some things from here, make it clearer. Take out quarter slowly, like this. Take out this. Okay, fine. Right, so this was the last down candle. This should be marked red. This was the last down candle before the push up, right? So swing high, swing low, swing high. Then price came and broke it to the downside. And once price broke it to the downside, this automatically became a breaker. All right, we'll look at CAD JPY. This automatically became a breaker. And this is our source. Remember we said we'll be waiting for price to retest either the source and the breaker, and price has come to give us a retest of our source and breaker. Price has given us a retest of our source and breaker. So what we'll be expecting is for a continuation move down. While expecting our continuation move down, my first take profit will be this point. Remember, if price is to give us what we want, right? If we have a downtrend, for this to be an established downtrend, 4 has to take out 3, right? That's exactly what we have. We have 0 is to 1, 1 is to 2, 2 to 3, right? What we have now on USD CAD is 3 is to 4. Just look at it. Let me paint it like this, right? So we have, this is point 1 is to 2, 1 is to 2, 2 is to 3, 3 is to 4, right? Highest point, 1 is to 0 is to 1, 1 is to 2, 2 is to 3. Now we had 3 is to 4. We expect the next point 5 to take out 3. We'll be expecting 5 to at least close beneath 3 for this downward trend to be established. So you could safely put your TP1 at this point, or you do, for scalpers, you put it at yesterday's low for a sell. I'll explain that when we get to the 15 minutes. Right, so we'll be looking at this. For swing trade traders, you have this point as your TP1, which is quite handsome recently. Price has been doing something interesting. So that's about 280, 290 pips you could get depending on our entry. it come down this way, right? So that is it. However, the long-term target for me can be seen on the weekly time frame. The long-term target for me is that price created an imbalance here. There's an imbalance at this point. There was a gap here, right? And price usually will come to fill up the gap, just like we saw in EuroCAD. It came back to fill up this gap, right? It came back to fill up this gap. So if price decides to push back up after filling up this gap, push up completely on EuroCAD, I won't be surprised. However, based on what we see on the chart, this is a bearish order flow. We'll look for an entry on the 15 minutes, and at that point, we'll be looking for what price will do at yesterday's high. We would like to also see TDI confluences like shark fin or divergence. Then our last step has to be broken, which is basically LSB, which is basically a breakout on 15 minutes, and then we'll be sellers. Now, so back to USD card, where is it, right? So this will be my long-term target. If I go back to 4 hours, squeeze it in a little, my long-term target will basically be this point, right? That's my long-term target. And that's some 900 and something pips. So let's even start from here. Yeah, about 800 and something pips. This is my long-term target. If this bearish order flow is established and it continues, this will be my long-term target. Now I'm seeing that USD card is giving me a bearish order flow. I can also see that Euro card is giving me a bearish order flow. That will want to make me go and look at US oil. That will make me want to go and look at US oil. So what is US oil doing? Those of us who've been a while in Forex, you know that US oil and the Canadian dollar have some correlation. If you look at it on the daily time frame, let me take this out, or even the weekly, US oil is at some unfamiliar lows, right? Unfamiliar lows. However, you notice it just took out liquidity at this point, right? It just took out liquidity at this point. The last time US oil came this low was in 2016, right? It's been a long time US oil came that low. 2016, then the next time after then was in 2002. God have mercy on economies that rely on oil, right? So if we go back to the 4 hours on US oil, you also notice something here on the 4 hours on US oil. You notice that it created a gap here. Maybe we'll see it better on the daily. No, 4 hours seem to be it. Right? There is a gap here. And if you remember, we said nature does not support vacuum. Somebody's mic is on. Kindly mute out yourself. Right? Nature doesn't support vacuum. I expect that soon, very, very soon, I don't expect price to plummet down to $10 per barrel. That will be bye-bye for the economy of some countries. Don't want to mention names. Maybe I should mention names of countries that are very far from here. Venezuela. Venezuela, bye-bye. Right? So, but as it is on the 4 hours, as it is on the 4 hours, I expect price to begin to make some push up. You will notice, let's magnify this a little. You notice an up candle here. This is an up candle before this push down. So this up candle before the push down here, our color connotation will be orange or thereabout. This is our breaker. right? This down candle here, our source. If you remember how we mark up, if you don't understand a word about what I'm saying, you have a free tutorial worth 5,000 US dollars on YouTube that will pull down very soon. Go watch it. So this is our breaker. Here, price closed above it. And when price closed above a breaker, we expect price to continue to push up upon a retest of the breaker and the source. And price just retested our source now, right? If you want to get more technical, then we'll be drawing a fib from this point to this point. We're drawing a fib to see if price has gotten to our OTE. Right, so we expect price to maybe inch down a little more and then rally up. All right, so as it is, this is our breaker. Let's take this out. No need to overcomplicate this thing. This is our breaker. Price broke beneath and now came and closed above. Then it's coming back to retest. It has retested the breaker and the source. So what we essentially have here is this. Then it went and broke this leg. It broke this leg. Once it broke this, we'll be expecting that this should not take out this. It might just come down like this and then give us this and do something like this and now continue the push up. Something like that. Remember, price can either do this, which is a downward trend. But if a downward trend is to be established, 2 has to find a way of turning back between 0 and 1, right? Then point 3 has to take out point 1. If point 4 breaches point 2 and closes up, this downtrend has been violated. We say structure is broken. So we'll be having something that looks like an extended W for a push-up. Now we're expecting 5 to turn back between 2 and 3 and then give us this next push that takes out 4. Then we'll say our uptrend has begun. Then this 0 down to 5 gives us an inverted head and shoulder for us to buy. For those of you who like trading, all those terms. We've learned so many things. Somebody even gave it name Batman. No problem. Right, so that is what we're expecting. That's what I'm expecting on US oil. So if this happens on US oil, if US oil actually turns back from this point and begin to make a push up, we are happy for many nations of the world, but also happy because of our own MT4. Because if CAD is strong, if US oil is strong, there's every likelihood that the Canadian dollar will also gain strength. And that will be in tandem with our bias for a sell based on what we are seeing now, the order flow being bearish. So if US oil, the price of US oil goes up, every likelihood that Canadian dollar will strengthen. And now, upon a retest of this point, we're just expected to push a little into this point, retest, and now be looking for a sell, right? We'll be looking for a sell of this. If we go back to the daily, where would we be hoping for this to get to? There are lots of gaps here, lots of them, right? So I will expect that if it's going to drop, it should come down up to this point here, right? It should come down to this line. I'm expecting to come down to this line for swing traders, and that will give us well over 950 pips, right? Come down up to that point. So we'll be looking out for sell side opportunity on the 15 minutes on EuroCard starting from Sunday, Monday. And what do we expect to see? Just like we marked up, we expect it to take out, this high, just push up a little, take out yesterday low, take out yesterday low. In fact, I expect it to come up to this point, if possible. Come here, take out some liquidity hiding around here. Take it out. And as it is taking it out, give us a shark fin upon taking it out. Then break the last step, LSB. Then we are sellers and will continue to sell. So this push up that we're expecting might be in connection with price trying to touch OTE on this point, right? So US oil, if US oil gets strong, I'll be monitoring US oil very, very well. Thank God I'll be around next week, hopefully, if price tarries. So if price pushes up, then we'll be expecting Euro card push up a little and then drop. These are all expectations. But remember what we said at the beginning. If you don't have any expectation, then you don't know what to do with what price is doing. If you have an expectation, two things can happen. Your expectations could be correct and then gives you a setup. Your expectation could be wrong or right. If it is right, so two scenarios. If it is wrong, two scenarios. If it's right, first scenario in being right is that it gives you your entry based on your entry conditions and you now enter for the trade. Or it doesn't give you an entry based on your entry conditions and you sit down on your hands and see price action move. There's nothing you can do about it. If you are wrong, you know you are wrong early enough because price is not doing what you want it to do. Then you sit down and wait for it to give you an entry condition against your initial expectation. Then you now go in, meaning that if we were hoping for price based on this order flow, we're hoping for price to continue to be bearish. But price comes back and break this red box. We are automatically bullish. Now, this red box becomes a breaker. We will now be waiting for a retest of that breaker. We won't just say because it has broken it down, we should buy immediately. We wait for a retest of the breaker, giving us bearish and bullish conditions for us to now go buy and go bullish. So once this box is broken, our bias changes instantly. We are now looking for buys. And even at that, things could still go wrong. But at least we've reduced the probability in our favor to be skewed to our favor. Right? We've done that. So we'll be looking for opportunities to buy if it breaks above this point. For now, we're looking for it to push into this order block, into this red box, give us a shark fin or divergence on 15 minutes, and we'll pull our trigger for the sell. First take profit, the previous low. And that is no small thing, right? Previous low that is about 248 pips. And the funny thing is that the way the market has been moving lately, these 248 pips can happen in 3 hours. It can happen in 1 day. Notice the large movement here. This whole movement happened in only 4 hours. 234 happened in only 4 hours. Notice what happened in only less than 1 week. 700 and something pips in 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, about 2 days. So the market has been crazy lately. And when the market is crazy, if you don't know what to do, close your MT4 or just withdraw your money, go buy shawarma. Don't donate it. But if you know what to do, it's an opportunity to make full money from the market. So we notice that we're expecting CAD to strengthen if US oil also decides to make a rally. You notice that that also tallies with our bias on USD CAD, which we're also expecting to be bearish. So if CAD does what we want it to do, if oil do what we want it to do, then we see a tendency for us to go bearish on all of this, right? Now, I'll quickly do something here. Let's quickly go to Forex Factory here. Right, so if we go to Forex Factory, and we look at next week. If you look at next week on Forex Factory, let's filter out only this. So if we look at Forest Factory, let's go up and see. We notice that Monday, nothing of note, even though everything is of note now. In fact, everything is of note now. Let's just put them back quietly. Everything is of note now. Even a sneeze of a governor is of note.
I'm telling you.
So as it is now on Monday, well, we can't really say so many things, but consumer confidence, of course, you expect consumer confidence to be negative. What do you expect? Right? So here, this Tuesday, we can see a lot of USD news here. I'm not looking at GBP because we haven't looked at any. Okay, we looked at GU somehow, but let's concentrate on USD for now. So here is USD. Notice how USD news 2:45, 3 p.m. Now we have flash manufacturing. We have new home sales. I expect most of these indexes or most of these parameters here to be red. Red because what has really been going right with the world lately? Right? So except you have a superior opinion, you could let me know. But I'm expecting that Wednesday, I expect core durable goods orders month on month. Of course, it should be negative. So many things should be negative this week. So many personal spending, so many things should be negative this week. If we are looking at the economy, right? So we expect things to be negative, especially with the USD. And if that turns out to be correct, then USD should be weak, or at least weaker compared to CAD, which might gain some strength with respect to oil. And that means our USD CAD bias is positive. We move. And if we go back to UJ that we looked at, it means that we might see a situation where UJ might also break through this, form a breaker, a bearish breaker, and then we are sellers of the UJ. If we go back to this point and we look at DXY, okay, I did a previous markup here. Let me remove all that. So if we look at DXY, if on the weekly time frame, let's see, weekly time frame, it just came into this supply. So two things can happen. It's either it takes out this high here and then decides to drop. Who knows? These days, nobody knows anything. We just follow what price does. So it has wicked into it. Will it fall down a little? Who knows? On the 4 hours here, what I see on this is if price comes back, this is an order block. Let's just follow what we know and what we're using. This is another block. Price made a higher high. So if price comes back and close beneath this, it gives us a breaker, and we will now be sellers thereafter. But as it is now, DXY, which is an item that shows what happens to USD, is still bullish. It's in a bullish order flow, basically. Right? So at this point, we're looking for opportunity to buy based on our flow. But if it breaks this point, we are sellers. So we'll be waiting to see, we'll be monitoring DXY side by side. If DXY is bullish, then you'll be expecting things like UJ to push up. You'll be expecting things like USD CAD to push up, right? But USD CAD is in the critical area where it could decide to return off this source or breaker. Right? So we have what we are waiting for. If it breaks beneath, if DXY breaks beneath, I'll be fully bearish on all USD XXX. We'll be fully bearish on them. I'll be hoping for it to break down, and approaching this point. right? So that's that. Somebody mentioned a pair for us to look at. CAD JPY. CAD JPY. Let's see that. All right, CAD JPY. CAD JPY on, let's go to, CAD JPY also had a gap which has been closed out. This was the gap here. And price came and closed it out. Then it dropped thereafter. So as it is on CAD JPY, this was the former, let's look at CAD JPY on the 4 hours first. You know, it was in a bearish flow. It kept dropping, creating lower lows, lower lows. It came here. This was the last push up before the drop. So we'll mark up this point. We'll mark it up and mark it up in red. This was our last push up. So this is the last push up, right? Price came, retested, dropped. Price came, retested, dropped. So as it is on CAD JPY, we are still in bearish territory based on our strategy. However, I want to confirm if price broke beneath here. Oh, sure, price broke beneath, so we are bullish here now. Let's move to the other template. It will show us more clearly. We are bullish already on CAD JPY. Pull this down a little. Remove all these other ones. So you see what we're doing. If anybody tells you Forex is easy, you have to put in the work. So this dot here tells us that this point is lower than this. And of course, you can see that by this, right? You can see. It tells us that this dot here is lower than this. That's the usefulness of this point. Now, since this dot is lower than this, then this up candle here happens to be our order block. This candle here happens to be our order block. So once price broke above it, it made this a breaker. Let's make it brighter. It made this a breaker and invariably made this push down to be our source. So when we saw this push up, we'll be waiting for a retest of either the breaker or the source to be bullish. In this case, it gave us a retest of the breaker and it ran away, right? Then it gave us another order block here. So what would we be expecting? We'll be expecting price to retest this order block. And upon a retest, rally. And this also seems to be confirming that there's a tendency for CAD to be strong next week. We have multiple confluences of confirmation. So if CAD is strong next week, we can have a retest or push up, or we could just wake up and it's pushing up. It means we've missed it. There's nothing we can do. If it continues pushing up, it will certainly give us another entry. Look at the way it was coming down, right? It will certainly give us another entry. If it doesn't give us on Monday, give us on Tuesday. If it doesn't give us on Tuesday, we'll definitely get an entry before the week runs out. But you'll just be happy if you wake up and see that price did exactly what you expected it to do. It makes you trust the strategy, trust yourself, and you can pull the trigger at any point in time. So you notice dark bearish candles forming, and it's giving you a signal to go long. On this particular day, this was when? This was 19th, on the 19th, right? If you use our new entry technique, right, from 19th, we would have been bullish. Once it broke above this, on the 19th, from around 4 p.m. on this time frame, we would have been bullish, right? If we use our new entry technique for CAD JPY, let me call it up here, chart window. And go back to 15 minutes on our new entry technique. Right, so on the 19th, we had a reason to go long here, but the time was around 4 or 16, something around 16. So we might not have had a buy opportunity of this. But the previous day, once it broke above this point, once it broke above this point here, once it created a breaker, we will only be obeying our buy signals. We disobey it. We ignore the sell. We only obey our buy signals, and we'll take it a risk to reward ratio 1:2. So if I'm risking 2%, I'm hoping to make 4%. If I'm risking 1%, I'm hoping to make 2. If I'm risking 5%, I'm hoping to make 10. That's what we'll do. So come back here and we'll obey only our buy signals. So this gave us a buy. We'll enter at the close of this candle. Stop loss of 35 pips or thereabout. Stop loss of about 35 pips. Our take profit will be 70. Did we arrive there? Oh, yes. Next one, it gave us another buy here. Stop loss of 39 pips. Take profit. This hasn't hit take profit, but will most likely get out of your trade before the week ends. Right? So we will not obey the sell. We'll only obey the buys. And we'll obey the buys that falls in line with our kill zone. This was in our kill zone, and this was in our kill zone. So only take buys in our kill zone. So we could have made over 100 pips on CAD JPY on Friday, simply just following this when we had the breakup. Right? So I believe no other question, as I've not seen any on the chat. That's how you check it out. So if you notice, now we have CAD JPY on our watch list, right? So we have CAD JPY on our watch list, and we are looking at it. Sorry, 1 minute. CAD JPY on our watch list to be bullish. We're looking at USD CAD on our watch list to be bearish. We have GU on our watch list to be bullish. UJ to be bearish. Euro CAD bearish. Those are the ones we've looked at now, except if someone else has another pair you want to look at. All right, I'll look at EG. Then I know some persons are interested in how they can make those big money I mentioned. No problem. The love of money is not good though. So EG, then I'll go back to that one. Let's look at EG. Call up EG here. Okay, so EG, this is 4 hours on EG. 4 hours on EG, this is our last bearish candle before the push up. Price hasn't closed beneath it. So we are still bullish of the Euro GBP. Unfortunately, we've missed our push up, right? So what I'll be expecting for Euro GBP is that it comes down this way and continues the push up for this bullishness to continue. However, there's every likelihood that it can break beneath, and this box automatically becomes a breaker. And once it becomes a breaker, I'll be waiting for price to come here for a retest, or even come up to the source for a retest, and from there drop. So as it is on EG, keep your fingers crossed and wait for what price will do. If price comes back into this point, we'll be looking for opportunities to buy. Now, why will we seldom lose heavily on this using this strategy is because we simply follow what price does. Do we lose? Oh yes, we do. Is it heavy? No. We'll wait for price to do what it wants to do before we go. And this strategy works very, very well when you can catch a trending market. Notice what happened here on the 4 hours, right? Notice on the 4 hours, we're here. This point here, this was the last up candle before the lowest low. Price came to this point, last up candle before the lowest low. This was our breaker. Why do we call it a breaker? Because price came and broke above it. This becomes our source. Why do we call this a source? Because that is where price began the reversal after a downtrend. When price broke above it, we expect price to come back again, retest the source, for which we'll be having an intra-section on or intraday W, or just the breaker in a case where the market is very volatile like we've had recently. And from this point onwards, we are bullish. So price came, tested the source, almost touched the breaker, almost touched the source and went high. Once price closes above the highest high of your breaker, which happens to be this, once price closes above it, you begin to mark up your order blocks thereafter. So this was our order block 1. When price came back into it using this red candle, we're buyers. This was order block 2. That small red candle there. Right? When price traded back into it again, we are buyers. Right? Once it goes above this point, then this one, it came down again. Here's another order block. Price came back into it. Boom, we are buyers. This was another order block. Price traded beneath it and it automatically became a breaker. We were looking for opportunities to sell upon the retest, to sell, but price pushed up and this breaker failed. So if you took a trade here, you might have lost. And it resumed the push up. So we also resumed our markups. Price traded above, came back to retest our box and pushed up. Boom. Came back here. Came back to retest it, pushed up, gave us this small red box. We mark the small red box out. Price broke above it, came back to retest it and pushed up. And now this is the last one here. And pushed up. So we're expecting for price to come back to retest it like it did now, and it pushed up. Notice price pierced through it, but did not close beneath it. So at this point, we are buyers. So if we go down to the 15 minutes, we would have been buying EG as at Friday, yesterday night. So we'll go back to 15 minutes. We'll be looking for opportunities to buy EG. Did we get a buy signal? Yes. We got a buy signal off our new entry technique. We would have entered for a buy here. Stop loss would have been 103. We'll be looking for something. Of course, I wouldn't expect anyone to go in for this trade because it's a wide SL, except if you have a fat account, right? So that's EG. If you want to check it the other way around for entry techniques, off the 15 minutes, you will notice you had a divergence here. So price was making a lower low, right? TDI was making a higher high. That is classical divergence for you. So at that point where you have divergence, you will now be waiting for LSB, which is last step broken. And this gives you a better risk to reward ratio. So this was the last push up before this low, the last push up before the low. You mark up your push up. Once price breaks above it, you set your buy limit. Price comes back to that point, picks you. Your stop loss in this case is 110. Your TP should be at least 1:2. So by the time you 110, you'll be looking for like 200 and something, somewhere around there. So if price wakes up in the morning, if you wake up, check your MT4 on Sunday and discover that price has pushed up, hit your TP, fine and good, right? So you'll be looking for price to come around this high here. So EG essentially is still bullish, except when price breaks it down. You might want to ask me that, so are you saying I would have forgotten about all the massive sell that took place here? And the answer is yes, except if you want to catch everything in the market. And tell me somebody that is catching everything in the market, I'll tell you somebody who has been donating his retirement benefits to Forex, right? Could you have gotten an entry off this for a sell? Yes, you could have, because you had this one up here and this was giving you a down move. You could have caught this sell if you want to, but why should you want to catch everything in the market? Why should you? Because it has formed like this that we are saying this is what you could have done this. In real life, when you're in the heat of the market, you don't know how far this thing is going to drop. You don't know. So just follow the simple rules that you've back tested and it's proven. Okay, I'll be taking Euro NZD as the last one, then we'll discuss the last point we want to do and call it a day. EN, Euro NZD. With this strategy, just look for 3, 4, 5 pairs only. Follow them, should be good. Okay, I was trying to do something before. So that won't, why is it still loading? Euro NZD. So we looked at UJ, UC, EC, GU, CJ. Now we're looking at EN. Am I missing anything? All right. Those are the ones we've looked at so far. So EN, EN, we'll go to the 4 hours. Those of you who trade gaps, notice it gave us a gap. This gap almost, thank God I was not awake. If I was awake, it should have taken sleep off my eyes. So it gave this gap. Imagine entering a sell trade because of this gap and the market doing this. Came back, filled up the gap, and continued the push up. So as it is now, Euro NZD has this as the order block. Woo. And price has pierced beneath the order block. So this is a confirmed breaker. Thank you. Who was that person? Who was that person that called EN? Who is Infinix Hot 8 Lite? All right, so this is a very good one for us. So this is a breaker here.
I've been following it.
Oh, thank you, Pastor.
Yeah.
So here we have our source. Here we have our source. So it formed a breaker, and here we have a source. Price had, after forming a breaker, price had gone to retest both the breaker and the source. It could push up a little further. Or it could just come down. But as it is now, it has given us what we want, a retest of the breaker and the source. Could it give us a deeper retest? Who knows? But where we are now, we are in a bearish order flow. So even if it pushes up, we won't buy. We won't buy. Price can push up to form an M. Price can push up to form an M, but we are not interested in the buys. We are only interested in the sell, as it were, here. Now we're only interested in the sells. So it's in a bearish order flow, and we're looking at it to sell. Let's go to the weekly. On the weekly, we can see some fair value gaps here. And price may want to come and fill up this gap. We can also see a structure here that price may want to come into. So there's every likelihood for price to want to drop that much. There's every likelihood for price to want to drop that much. So we'll be looking at EN. Please, Pastor, when you see the entry, alert me in case I'm not on my system. We have over 1,241 pips to take off this thing. Even if it is 700, 800, we take. We'll give the testimony. So EN is a powerful one. NZD pairs are always very pipful. So they are not for the faint-hearted. They could make you smile today, and your smile will can quietly turn into, let me just stop it there. Right, so I think this is
vanish.
so I can stop the recording now in case you want